The concern is basically that markets either don't know how to price a trade war, or that you take too much risk off the table and actually nothing happens, or on the contrary, that you're complacent and something ugly happens.
Yeah, and I think also we're learning slowly how the Trump administration deals with the rest of the world. And so far they've done what they said they're going to do, but there has been some damping down of activity. But you're right, it's very easy at the top level to say what might happen, but at the bottom-up level, certainly when it comes to company earnings, very challenging.
But what does it mean then, Rick, on how much risk you take on the market right now?
Well, we have risk on, so we're overweight in equities. We're very mindful of the fact that that is an assumption that we won't have a completely untrammeled trade war. Maybe the safe haven's our US equity bet. So we're overweight US equities. We like EM, but we scaled back that bet somewhat.
Okay, what is the concern if you look at US equities? So they're giving back to shareholders. There's like dividends priced in. But if trade escalates, how much are you looking at some of the industries being hit?
Well, there's an industry level and there's a cap level. It makes small caps look somewhat more attractive. US is quite a closed economy, so there's an extent to which earnings will be affected, but maybe not as much as some of those more economically sensitive markets around the world, particularly in the Eurozone.
What do you do with emerging markets?
We're overweight in emerging markets, both on the debt and the equity side. So the dollar is a threat to that position. But I think if you roll back the clock and look at the last time the dollar strengthened, a lot of the things that were scare stories didn't actually transpire. But to be sure, volatility's gone up and we need to adjust for that. So we pared the position back a little.
Rick, good morning from New York. I believe cash is an asset this week. For you guys, is cash something to be valued now that you can make money on it?
Well, certainly there's more of a carry trade that's creeping back into talk of foreign exchange markets. But our risk-on position really doesn't involve holding cash as a hedge at the moment. So we'd be underweight bonds, and that would include cash in order to finance those overweight risk positions.